There we go.
How's it going? Can you hear me all right?
Yeah, perfectly. Is it Cyril or Cyril?
It's Cyril.
Cyril. Cyril, I'm just going to go and get the bot ready to record, matey. I'll be a couple of seconds. I'll go on mute. I won't be too long, mate.
All right, no worries.
Perfect. All good. Okay. Well, look, Cyril, as we know, this is not your first rodeo. You're quite an industry head when it comes to DeFi now. You've had a few projects which maybe you want to speak about. But before we get kicked off, mate, you just while waiting for a few people to come in, you maybe just want to start basic introduction, a little bit about yourself, bit about your history, why you got into DeFi, maybe a bit about your background, and then that'll kind of we can start maybe forcing the conversation a bit more from there. Then
Yeah, sounds great. So yeah, my username here is Cyril Kier. I'm actually a publicly doxed individual. My name's Joshua Hood. Great to meet everybody. Appreciate you guys having us up here today. Um, and yeah, so my background, I started in business management back when I was 18. A buddy of mine and I, we started a wireless internet company in rural Virginia because the only other option was dial up or satellite, which was pretty spotty at the time. We ran that for a while, wound up having to shut it down when the FCC changed the regulations, stating you had to purchase the right to use the frequency. Verizon bought it out from underneath us for about 1.5 million, so couldn't really make a counterbid at the time. From there, I was working with another company and for a couple of years, and I was the guy they would send to locations that weren't performing well, with the singular purpose of fixing it up, getting it performing the way it should. And then when my father started getting ill, I moved up to Pennsylvania and helped him run his business. And been doing that now for, oh geez, about 6 years. But
what was
uh,
that business?
it's actually a painting and renovation company that focuses on like high-end custom work for those big fancy homes.
Nice.
So yeah, yeah, it's great being able to network with people. I actually stumbled across, some investment managers and things like that at at different job sites, and it's always fun chatting with them. Um,
Do you actually roll your sleeves up yourself, Cyril, or are you more of an observer and cracking the whip kind of guy?
Well, I'd never ask my employees to do something I'm not willing to do. Um, so
Good answer.
I'll get in there and help as well, and plus,
Lead by example.
exactly, and I like training up new people who come to work for us. That way, I can ensure that they're not trained with any bad habits.
Nice.
But I got my start in the finance industry almost 13 years ago. I started investing into various stocks and trading and whatnot. And then about 9 years ago, I started dabbling in trading blue chip cryptos. And so it was a bit of a culture shock for me when about 4 years ago I moved into the DeFi space, right? Because it's very different from traditional investing, and so once I got used to it, I realized that it's a new, fresh, emerging market, and there's so much potential for innovation in the space. Um, and I actually in January of last year, or no, I guess that's this year. Um, Time flies. Let me tell you what. But in January of this year, I started a corporation that is utilizing Web3 technology to tackle the ticketing industry, and we're going to go after Ticketmaster with that. It has this whole dashboard for event managers to, create however many tickets they need, eliminates fraud.
Would this be blockchain based? So just so I understand, so will this be essentially generating tickets for concerts and stadium events, but rather than a printed ticket or emailed, it would be almost like linked to presumably some sort of a wallet or?
Yeah, exactly. It is blockchain based. And we're building that out. We have our proof of concept product completed, and now we're building out the dashboard for the event managers and the app for the users, etc. It's Only Burns is definitely not my first foray into the DeFi market, and it started with an idea, right? I've been in all these different projects where everyone always got excited over a burn, right? Um, and the more I looked into it, I realized a lot of projects, when they do a big supply burn, it's all OTC and it doesn't really affect the price, right? Because it's tokens that they had sitting in, their treasury wallet anyway. And so people get excited over a burn, but 9 times out of 10, those burns don't actually do anything, right? The people getting excited and buying, trying to, be like, oh, we just burned XYZ, it's all hype based. It doesn't actually affect it. So we sat down and decided to map out what would an ecosystem look like that is capable of bringing the curve wars to burning while still being sustainable and having longevity. And thus, Only Burns was born.
So the idea is based on governance to determine what project, I assume, would be granted an amount of purchases that would you guys would purchase from your project and then burn effectively those tokens.
Exactly. So I'm going to drop a couple links here in the AMA questions room real quick.
Sure, perfect. Just while Sarah's doing that, guys, if there's any questions, you know the drill. Just drop them into there. Also, if anyone wants to come up and have a chat, and feel free to put your hand up, and I'll bring you up to the stage. We haven't got a massively overpacked room, so I'm quite happy to bring one or two up if people want to come up and ask some questions as well.
Awesome.
Sorry, Sarah, go ahead.
Yeah. So basically, let me go ahead and kind of dig into a little bit of the bird's eye view here. So like I said earlier, Only Burns is bringing the curve wars to buyback and burns. We're creating a new way for projects to create price appreciation on their tokens or their NFTs. With governance-backed community votes, projects can fight for one of the top 5 spots each month to receive a buyback and burn. And the way that works is communities buy a burn token and they utilize our burn DApp to vote for their favorite project. They burn some of their burn to back their vote with actual governance. And then the votes are tallied up on the burn board, which is visible there for everyone to see. And at the end of the month, the top 5 projects receive that buyback and burn. And we are able to we actually do the buying and selling through a DApp on our website, so that we are able to collect that buy tax in USDC. That way we're not having to sit there and sell burn in order to get the funds to do the buybacks and burns, right? Because traditionally taxes are collected in your native token. Now once an actual DEX launches with the ability for you to tax the USDC side instead of your token side, we will likely migrate our pool to that, that DEX, providing it's a well-established one. But until then, the transactions take place through our DApp on the website, and that DApp will be getting released when our pre-sale is over. We're actually in pre-sale right now.
So in terms of so trying to think from two sides of the sword. So from an investor's perspective, and then obviously from a project being able to fund itself perspective, how do the two go hand in hand? So obviously the benefit, let's say members of MDB want to buy Oburn in order to, effectively burn that Oburn token for the governance vote towards MDB as an example. The benefit is if they're an MDB holder, then that benefits them by burning the tokens. Of course, I understand that side. On your side of the fence, from a project, how does the project sustain itself over time? What's the mechanism? So you talk about tax and things like that. Can we just maybe dive a little bit into that to get more of a sense on the benefits to you guys as a project?
Yeah, absolutely. So the buy tax is 10% collected in USDC, and 90% of that 10% goes to the service wallet, and then 10% of that. Sorry. It always flips the numbers around in my head. I have a little bit of dyslexia. So you've got 10% buy tax, 9% of which is going to the service wallet for the buybacks and burns, 1% of which is going towards the project treasury. And that allows us to then invest, stable farm, etc., with the treasury funds to grow that treasury for our protocol over time. Whenever we perform buybacks and burns, that obviously is great advertising for us, right? Everyone's like, oh, wow, someone just came and bought, $10,000-$15,000 worth of our token and burn it. What's going on here? And, so that's great visibility and advertising. And we have, oh, sorry, go ahead.
So is it just 10% buy tax? 90% of that 10% goes to service wallet. Service wallet being what exactly, just so I understand?
Yeah, the service wallet is the wallet that collects all the funds for the buyback and burns.
Oh, right, understood. So that'll be 9% of that tax will be geared towards the actual purchase of whatever that would be. What will the purchase be in? Presumably, once you get it in Oburn, you will purchase whatever token it needs to be in their native token. You'll just do the exchange, whatever that exchange needs to be, effectively. So
Right.
if it was MDB as an example, obviously you've got Oburn, you just need to convert that into BNB or whatever it would be to the native token. Yeah.
Yeah.
You just exchange that on the deck, so to speak, or the DApp.
Well, the nice thing is with the buying and selling going through the DApp on our website, we actually don't need to exchange Oburn because we're receiving it in USDC. That way, we're not having to perform contract sales of Oburn in order to then use those funds to bridge it over to BSC, buy back, and burn MDB, right?
Yeah, that's always a benefit, I think, when you don't have to do that. You see a lot of projects that do that, which goes wrong. Can I just double check? I don't know if my mic sounds muffled. I've got my iPod, my Apple my iPod ears, whatever they're called, iPod 2 ears. Anyway, does it sound muffled or is it not too clear?
It does sound a little bit muffled.
Sorry, guys, my bad. I'm not sure how to make that any better.
It's all good, no worries. I'm able to hear you well enough, so no worries there. But yeah, so that's kind of the nutshell of our Oburn token, right? And with offering the Curve Wars of Burning, we tackle problems such as inflation. You've got some protocols that maybe they're sticking to their guns too hard about their rebasing. Now they're overinflated and they need a supply reduction. You've got projects that have consistent selling driving their price down, and a buyback and burn can help with that. And then you also have like NFT projects that maybe have staking rewards, and that causes inflation as well by injecting additional tokens in the form of staking rewards to their ecosystem. So there's many different ways that burning as a service can apply to multiple projects. And so by essentially gamifying the voting process, we make it easy for projects to rally their communities to vote for and earn buybacks and burns from our protocol.
Cool. So in terms of the actual Oburn token itself, so for me as an investor, if I want to make money via only burns. So I buy the token. I can use some of that as a governance to kind of help with some of my other projects that I want to try and get, burns for. How does price appreciation of O-burn take into effect? Can you talk a little bit about the LP and how that's kind of structured?
Yeah, absolutely. So, Oburn is what is considered a hyperdeflationary token because when users are purchasing Oburn, right, they get a percentage of the total supply. Then, when communities and projects and users are then burning some of their Oburn to back their vote with governance, that Oburn is going to the dead wallet. It's leaving supply. So it was purchased, but then it's never getting sold back into the liquidity pool. So then you get a skew, right? There's more USDC in there than there was initially. Plus 10% of cells burns the tokens straight to the dead wallet as well. So there's a 10 in, which goes towards the service wallet for those buybacks and burns. And then there's a 10 out, which burns the O-burn token. And so by having this hyper deflationary nature, if someone wanted to say, purchase, like $500 worth of O-burn or something during pre-sale and then just sit on it, eventually, as the protocol is being utilized and the token is deflating, they're going to wind up with a much larger total percentage of the total supply due to the hyper deflationary nature.
And what's the tokenomics of O-burn in terms of kind of, what's the size of the market in terms of what you're gonna what your total size of O-burn that'll be in float, or what have you got a cap on that?
Yeah, so it is a hard cap. We started off with 1 trillion tokens, and then we actually wound up burning 2.5% of those during seed round because the seed round, we were raising some costs initially to launch the protocol, get the artwork for our NFTs completed, website, etc. But I was able to negotiate reduced costs on those. So instead of continuing with the full raise that we were looking to do with seed round, we actually cut it in half and then just burnt the tokens. So we have essentially a starting supply of 975 billion. And with the hyperdeflationary nature, we anticipate that will reduce relatively quickly. Of course, you have a law of diminishing returns, right? 10% of a million is a lot more than 10% of 1,000. So as the supply reduces over time, we'll see that that deflation kind of peter out its curve a little bit, and it won't be as aggressive in the deflation. Now, it is hard coded in the contract that we are able to reduce the taxes both in and the burn out. And we're never able to raise it once it's reduced. So it's hard capped at that 10. And then if we see, okay, our supply is getting really, really low at this point, we can scale back the burn aspect of the on sales and kind of negate it a little bit that way.
Got it. What will will all tokens be in circulation at once?
No, because if we were to put all of the tokens in circulation at once, then they would wind up burning off very, very fast, right? Because and so what we do is every so often when the supply in the LP is getting really low, we're going to be taking a portion every so often of the treasury profits that we've earned through farming and whatnot, pairing it with additional O-burn, adding it to the LP. There's also we also have a percentage of our supply allocated to chain bets. I don't know if you've heard of them, but we've partnered with them. People are able to go onto their website and play a lot of fun casino games with O-burn. And if they win, they're winning more O-burn. So we have a percentage of our supply allocated to that. And all of our token allocations are listed there on our website. I believe it's one of the first things that you scroll across. Believe in total transparency with what's going on, just because DeFi is a muddy waters place often in many protocols.
Perfect. So just where are you currently up to in terms of your where you are with the project? So presumably, I don't think you've launched yet, have you? It's still to be launched. Is that correct?
That is correct. That is correct. We're
Yeah.
currently in pre-sale stage right now, and that pre-sale goes for, I believe, another 9 days. Or yeah, I think it's 9 days. It's almost down to 8 days now. But that we wanted to um, really get to the point where we were pretty much ready to launch, right? Because you have to tackle the bear market differently than the bull market. During a bull market, you can start really building out the community and advertising ahead of time, and people are happy to wait, right? But in the bear market, people don't want to wait as long for a protocol to launch. They tend to just slap the server on full mute and then forget about it.
Yeah.
So we got to the point where we were almost ready to launch. We actually sold out our seed round after just 2 AMAs across 52 people with an average purchase of $625. Um, and so people are definitely loving what we're building here. And there's additional aspects to our ecosystem, but I'll pause for a moment if you have any questions.
Yeah, no, it's really good. So just keen to understand. So pre-sale, you've got 9 days remaining. What is the token price in terms of what you anticipate, at launch, what that will be as a kind of a per Oburn price?
Yeah, absolutely. So pre-sale is currently going for the same price that we will have at launch, which is uh, 0 point and then 5 zeros and a 4. So we're starting off with a lower price. That way that initial controlled release of the O-burn for the governance aspect can face some good price appreciation as projects and protocols are buying into it. Are you familiar with OtterClam?
No, I'm not. Don't think I am. No.
Okay. OtterClam it's a fairly popular project on Polygon, and they absolutely loved it. They want to grab a tier 3 NFT, and I'll get to those in a minute here. That way, their entire community can send Oburn to the wallet that has that tier 3 NFT, and then they can double the governance weight of their entire
Nice.
community when they do a buyback and burn vote.
Very interesting. Yeah. So you double your vote, so that can give projects more benefits in that aspect if you own that NFT. Very cool.
Absolutely. So let's get into the NFTs
Sure.
because I am absolutely thrilled with the artwork for our NFTs, and I hope you guys see why. We actually hired a company that makes 2D and 3D digital assets for AAA games. Two of the games that they worked on was Cyberpunk 2077 and The Last of Us. Um, and Yeah, so let's start off with the tier 1 NFTs.
Are you going
They
to be
have,
dropping some of the images in the server, or are they?
yes,
Oh,
sir. So the tier 1 NFT,
something
it
like
has a total supply of 1,000. We're keeping them very, very low supply, and I will get to why here in a couple minutes.
yeah,
So
perfect.
those are your tier 1 NFTs. They're the plague stricken flame cultists. We actually have an entire lore behind our ecosystem, and we're telling that story on our Medium page. And we're releasing a new chapter generally bi weekly. The next chapter is going to be coming in a couple days here, that tells the whole story. And it's a pretty fun story. So, check it out. Even if you choose not to get involved in the protocol, the story that we're writing there should be a good read at least.
Sure.
Um, but yeah, so those are the tier 1 NFTs. They have a total supply of 1,000 during stage 1 minting. 33% of the NFTs will be available at $100 each. Tier 1 NFTs, if you have one in your wallet, when you connect to our Burn Vote DApp to allocate some O Burn to vote for your favorite project, let's say MDB, our burn app sees that you have a tier 1 NFT and it boosts your governance by 25%. So every 1 O burn that you burn counts as if you burnt 1.25.
Nice.
And then let's see our tier 2 NFTs. Dropping those now. Tier 2, 500 total supply. These are our tier 2 NFT examples.
What's the price of them?
So there's 500 in total. And during stage 1 minting, 33% of them will be available for purchase at a price of 250. These NFTs will boost your governance weight by 50%. So every 1 O burn you burn counts as 1.5 burnt.
So they are cheaper to buy than the tier 1s, and the tier 1s give a less boost. Did I get that right? $300 for tier 1 and $250 for tier 2.
No, it's $100 for tier 1.
Oh, sorry, $100. My bad.
Yeah, which so utility-based NFTs don't need to have like art traits and collectability traits for like profile pictures, and we could have saved a lot of money if we had just gone with, like a simple utility style design. But the artwork was so good, we wanted to have the collectability aspect as well.
Sure.
And our artists definitely knocked it out of the park.
They do look epic. I've got to say, they look fantastic. Who wrote the actual lore behind the idea for the story? Is that who came up with the concept?
That's me. Yeah.
Cool. I'll be
Yes, sir.
interested to follow that narrative, my friend. Okay. What about tier 3?
Tier 3. Okay, so I do not have fully completed ones yet. However, I do have ones that I can tease. Tier 3 is fully 3D modeled, and the NFTs that you have will actually rotate, so that you can see all sides of them. So let me drop some examples here of that. So he does not have his background yet. This is one of the tier 3 NFTs.
They look brilliant. Yeah. Wow.
Here is another one of the tier 3 NFTs. Oh, wait, that's the wrong one.
Delete.
Yeah, delete. I didn't like the little branches coming off his shoulder. I said it looked like he was throwing his hands up in surrender.
They look awesome.
And
Is there any rare ones within them? Are you going to have some rare ones, or in terms of traits?
so as far as the tier 3 are concerned, yes, there will be some rarity. There's actually 3 different variants for the tier 3s. And these tier 3s, one second, let me grab it. Where the heck did it go? Because there's another variant for the tier 3 hiding somewhere. There he is. All right. Save image. 1 second. I will have that for you. 2 seconds. Copy image. All right. Here is one of the other variants. There's three variants of the tier 3 NFTs. They will all have the different texturing. So you'll have like the dark modeled, like charred texturing. But these are your tier 3 NFTs. Yes, they will have some traits that are rarer than others, but when there's only 250 of them in total, every single one is rare, in my opinion. Honestly, the hardest part for me when I was going through tier 2 artwork was deciding what traits were going to be rare because they all looked so awesome.
What's the quantity, the price, and the boost level on the tier 3s?
Absolutely. So tier 3, 250 in total, and they will have a 100% governance boost, which is why a lot of protocols are trying to get the tier 3s.
Interesting.
Um,
And the price of them?
so the price of them during stage 1 minting is 400.
Are you going to release 33% of them too, or in terms of the first batch?
Correct. So during stage 1 minting, 85 of them will be available. Now, when it goes into stage 2, the entirety of the remainder of the tier 3 NFTs will be available for purchase.
Will the sale of the NFTs come before the launch of the token, or the other way around?
The other way around. So the token will be launching prior to the NFTs being released. And then the NFTs, they'll be following up shortly afterwards, though. Like I said, the only one we're still waiting on is tier 3 to be finished. Once tier 3 is finished, we're ready to roll them out. Um, and yeah.
How does so just in terms of the actual, I'm trying to work through this logically. So, let's say the governance vote. How are you been able to monitor? So what kind of ideas have you got for capturing the voting in the governance? Is it through the DApp? Is it through forms? How does that side of it work? And then ultimately, once you determine, presumably it's every 30 days, once you determine what projects won the vote, so to speak, how do you determine how much is purchased in terms of, say, it's MDB as an example? What do you want to maybe just guide me through that?
Absolutely. And great question. I appreciate it. So the way that it works is we have our burn vote DApp, right? It's part of our main DApp there on the website. Again, that will be released when the token launches. And what users do is there's a drop down where they can select what network the project is on, and then they paste in the smart contract address. Then when they connect their wallet, it looks and it sees, does this wallet have a tier 3 NFT? If so, apply the boost. If no, check for tier 2. If no, check for tier 1, right? So it runs these checks to see if it should be boosting the amount of governance assigned. And then there's a leaderboard. We call it the burn board, where once you do your vote, you can go over to that leaderboard and you can see your vote applied to the total there. So it's perfectly visible. Projects can see where they stand on the ranking. They can say, okay, we need just a little bit more, and then we'll bump up from like the 3rd spot to the 2nd spot and get a larger burn, right?
Yeah, I think that's quite innovative, because if you can, I was just going to say, if you can see it all happen in real time, live, and see where the variables are between each project and stuff like that, you can almost imagine, you know, individual projects forcing the envelope a little bit to say, look, guys, get over to Onlyburn, buy some more Onlyburn tokens, put some more governance rights on, say, MDB or Sphere or whatever that token is, because we want to be the project that gets the most burns. It's a novel idea, but you've got to think of the social elements of it as well, which I think is quite novel.
Exactly, because it triggers the natural competitive nature of people, right? If you're fighting for that number 1 spot, you're going to do your best to win it, especially since the number 1 spot gets 60% of the funds collected as a buyback and burn. So, like, let's say your standard mid-size project gets about 500,000 in buy volume over the course of a month, right? Just as an example. So for that example, if you take the percentage of that, the number 1 spot would get approximately 27,000 as a buyback and burn. The number 2 spot would get approximately 9,000. And let me see right here. Yeah. The number 3rd spot would get like 4,500, 4th about 2,700, 5th about 1,800.
Yeah.
Obviously, larger projects are going to stand a better shot at getting that number 1 and that number 2 spot, but they also have larger liquidity pools. Smaller projects are going to have a smaller liquidity pool. So, a $4,500 buy and burn on a smaller project that managed to get 3rd place is going to have a similar effect on their price action and the supply reduction as a number 1 spot getting a $27,000 buyback and burn, right? So,
you basically split it 60%, 20%, 10, 6, and then 4, so that at least of the 5 top projects, you're going to get some sort of a kickback of some sort based on the governance voting, really, which is a smart idea. I like that because it keeps the idea of projects being in with a shout to get more volume through the door, so to speak.
Exactly. And like if it was a winner take all sort of situation, then, anyone who comes in second place is going to feel
Yeah,
like they got cheated, right?
yeah,
Like, they kind of tossed some money into a pit and got nothing out of it. So by distributing it across the top 5, everybody who works hard to get on those top 5 spots, they all benefit, right? In some way. So, yeah, that's why we went with that. And initially, when we first were coming up with the with the project idea, we were like, well, we should keep it anonymous, right? So nobody can see what project's in the lead, because we were so worried that someone would try to front run the buyback and burn. And then the more we thought about it, the more we realized that that would actually make it harder for them to compete. You might have a project come along and you know do do a pretty sizable vote, to get, thinking they got themselves to number one spot with that, but it turns out they only got to like the second spot, right? So make it all public, and then to kind of counteract the people who may try to front run it, right? Think of it this way: if you know that MDB just won the number one spot, what do you think is going to happen? The protocols and the communities can start tweeting about it. They can start saying, yo, we just won this sizable buyback and burn that's coming. People are going to, in their nature, they're going to try to front run it a bit, right? That's bound to happen. But what that does is it causes additional outside eyes to notice, oh wow, this token's moving up. They grew like 5, 10, 18%
hmm
over the, from people buying in trying to front run it. But what we do is after voting closes, there is a 2-week period. So for 14 days after the voting is closed, sometime during those 14 days is when we will do the buyback and burn. So it's not immediately afterwards, it's not a day afterwards, it's sometime within those 14 days. That way you have time for people who are seeing the price increase from someone trying to front run it. It gets that visibility, it gets that excitement going, and then all of a sudden, boom, buy back and burn, right?
How do you incentivize the behavior that you're looking for in terms of actually using the tokens for governance? Because let's say
Yeah.
you've got 10,000 holders, but you've only got 1,000 people actually being involved because the 9,000 holders are precious to the Oban and don't want to use their precious token, even though it benefits them in a quasi way for, say, MDB in that essence. But from your perspective, how do you incentivize that? And what happens if that starts to drop and reduce? How does that affect your project?
Yeah. Again, another great. See, I love it when I have AMAs with projects and people who ask really good questions. So I appreciate it. So one of the things we're looking at doing is if you are the first person to vote for a project, and basically place it on the burn board somewhere, we are looking at basically awarding a fire starter NFT, and they're collectible. They're not available for purchase. The only way to get them is by being the first to vote for a project, right? So that incentivizes the initial start. Plus, we are going to be preceding the service wallet with funds for the first 5 months. And I'll get to why it's 5 months here in a minute. With funds that they can already start fighting over. So let's say that we precede month one rolls around, the launch of the protocol. We precede the burn wallet with, say, let's say $2,000. If one person comes along and burns one O burn for a project, that project is now in the number one spot to receive a $2,000 buyback and burn. And then as people are like, oh, well, let me vote for my project, let me vote for this project, the purchasing of Oburn to then try to get those initial seed funds actually increases the amount that's in that burn wallet, right?
Mhm.
So, yeah, and then there's additional aspects regarding like the users voting for their projects. Yes, you could choose to sit there and just hold your Oburn, but you got to look at it this way. Let's say you yourself personally have a rather sizable bag of MDB. It is in your best interest when you see the burn wallet sitting there with, oh, I don't know, $27,000 allocated for the first place winner. If we had like $500,000 of buy volume over the course of the entire month, um, you wind up uh, thinking to yourself. Sorry, I was reading the AMA questions. Let me tab off of that for a moment. So
Don't worry, it's okay.
I wind up losing
Yeah,
my
it's
train of thought.
very. Trust me, it's very easy to get sidetracked with MDB for sure.
Yeah. But you see that all those funds are sitting there waiting to buy back and burn a project. It's in your best interest if you have a big bag of MDB to vote for MDB
Oh
because
yeah, no, for sure. To be honest, I mean, look, that in itself is incentive enough. I guess I was playing on human nature. Some people, are protective. Some people are maybe not so, and it just, you know, is there something in the back pocket to kind of enhance the idea that people want to engage in doing this for the right reasons, and because number one, it benefits your project because you're seeing the volume in and out, and number two, benefits the individual obviously because it gets them to burn their precious governance token for the related project, and that's really what you want to promote. So I say it wasn't a trick question, just that you had that something in your mind in terms of how you, and presumably these things, they're not, it can be very liquid in the sense of a moving target. You may decide one day, to generate more liquidity, sorry, more activity, we're going to do X or we're going to do Y, we're going to promote something. There'll be loads of ideas that you can always come up with to innovate and do that even further down the road if you notice it's starting to dip off a little bit.
Absolutely. And that's where our marketing director Sketch comes in. Like he has some pretty solid ties with a lot of communities on Twitter and things like that. And he's kind of hacked the Twitter algorithm, so to speak. He's got it all figured out. And gets really good engagement. And so he's helping us build that up because I'm not a big Twitter person personally. And so that's all kind of new to me. So that's why if I don't know something, I bring someone outside, right? To
Yeah.
help with that. So that's where I've got Sketch as our marketing director. And he's constantly sending me over. He's like, oh, let's do this. Let's do earning for education, things where we can post tweets about the project and then pick a random person who retweeted it and they get a little prize,
Yeah.
things like that, right? So yeah, there's tons of different ways that you can promote it, incentivize it, and then again, once we start rolling out the first those first burns, I mean that's going to be great advertisement in and of itself. You could have a protocol who doesn't even realize that they want to won one of the spots on the buyback and burn until we message them and say, hey, guess what? We're coming to buy and burn your tokens, and there's not really a whole lot you can do about it.
Yeah. Well,
But
listen. I mean, I can see a few questions popping in. I'm gonna get to some of the questions in a sec. I just got a couple more myself. So, just want to harp back on to the 10% buy tax, which you 90% goes to the service wallet, which is fine, 10% to the treasury. Do you want to give some insight into the treasury? So presumably, when I think of the treasury, I think of ways in which you can bulk utility in terms of bringing in additional revenue streams to bulk up the kind of volume that's coming through from trading. Is there any ideas in terms of the future thoughts on that, or have I got
yeah,
that wrong?
Yeah, absolutely. So our treasury, yes, we get the 1% of the 10% buy test goes towards the treasury, and then we're taking the entirety of all the funds raised from the NFT sales, and that is also going into the treasury. And then our treasury is going to utilize safe farming and investment strategies, ranging from stablecoin farming, utilizing overnight finances, ETS hedge systems, so that even during a bear market, our treasury is growing. Exotic strategies on Uniswap v3, and then a smaller percentage of it could be allocated towards higher risk, higher reward, more speculative style investments. I aim to take my experience over the last nearly 13 years of investing and applying it to our treasury as a way to make sure it is diversified, mostly in safer, stable farming assets, things like that, with a percentage. Basically, the riskier the investment is, the smaller the percentage gets assigned to that. The goal is safety and growth. Now, when that treasury, when it hits a certain growth point, which we have all these numbers calculated out, and we're looking to see the treasury essentially grow about, I believe it's like 43%. I don't have the document right in front of me at the moment, but once it hits that target, we're going to be releasing what is essentially kind of like an ETF called Arson. Arson, there's only 500,000 of those tokens. And we are utilizing a portion of the treasury to create the initial liquidity pool. There will be no pre-sale on it. And it will launch at like $4 a token, I believe is the numbers that we calculated. And what our treasury does is, with the profits from the farming and the investment strategies, we'll take 30% of those profits, purchase Arson out of the liquidity pool, and then use an additional 33% of the profits, pair it with the Arson we just purchased, and put it back into the liquidity pool at the new higher price. This deepens the liquidity over time and essentially creates a positive sum scenario, because it's not reliant on money coming in from investors. The money is coming in from the treasury profits.
What's, when you say ETF, what is the, so I think of a basket of X or Y or whatever that would be. What, when you say Arson, is like an ETF of what?
Yeah, so the reason why I say it's like an ETF is because it's essentially, the value of it is grown by the treasury profits.
Oh, I see. So the aggregate of the treasury, so that could be multiple different variances of what you've invested in. Could be farms, could be whatever you've invested in. You're creating a token that's essentially backed by that.
Exactly.
Nice.
So
Very
yeah,
interesting.
that's the, and I actually wound up accidentally totally skipping over the fact that we're releasing a rent marketplace, and that's why we're keeping the NFT supply so low. But
You're just full of innovation, Cyril.
well, I was looking at it, and the current rent marketplaces, they operate off collateral, right? Which means someone could put up collateral, rent your NFT, and then run off with it. And, sure, if you're in an NFT project that has like 10,000, 20,000 different NFTs, that's okay. You can just buy another one. But if you're trying to rent out a tier 3 NFT to another user or another protocol that wants to borrow it to double their governance weight, you're not going to want them to have the option to run off with it. So we're creating a new style of NFT rent marketplace that essentially wraps the NFT that you're renting out, and then when the rental period expires, the smart contract pulls the wrapped version out of the wallet of the person who rented it from you. That way, at no point in time do they wind up with your NFT in their wallet like traditional rent marketplaces.
Why would I want to rent an NFT?
So let's say, because there's only 250 of those tier 3s, right? Let's say you're a project that's entering the scene after they've all been minted out.
Yeah. So it's for extra governance basically. If you want to rent it, you don't own it, but you want the governance at that specific time, and then you can give that back.
Exactly. So it's a way for people who have those NFTs to earn some income off of them via renting them out on the rent marketplace. So as our project grows in popularity and there's more and more and more demand for additional governance because they're competing with one another, they can rent one of those NFTs to boost their governance weight from the users who currently own them.
Okay, so just going back to Arsenal a second. So just so I understand, so Arsenal is based. You think it's going to be $4 per Arsenal, and it's going to be linked to the basically the performance of the treasury ultimately. But obviously, the treasury can go up and can go down depending on the investment and how that kind of works. So is that presumably is there any liquidity pool linked to Arsenal, or are you just essentially buying a percentage, some sort of a proxy? I'm trying to think about how to word this correctly, but a proxy to the treasury that you own a percentage of, and the value of that treasury, whether it falls or rises, will be kind of linked to that value.
Yeah,
Or is the ways it does the buys and sells, let's just say, of arson also affect the price of arson?
yeah, so arson will have its own actual liquidity pool, right? And people are free to buy and sell it, trade it, hold it, etc. But in addition to that, our treasury, if it's, let's say it's a month where it doesn't make a whole lot of profits, then it will make that 30% of those profits. It'll purchase the arson. It'll use 33% to pair it back into the liquidity pool. So it's essentially arson. Arson is its own thing, its own token, and our treasury, when it has profits, does the purchasing of arson straight from the liquidity pool
Mm.
and then adds it back to liquidity with an additional percentage of the profits. So if there's a month where the treasury doesn't really print a profit, like if the value of the treasury goes down, let's say we have another black swan event and now we've got crypto.com collapsing and everyone runs for the hills. Well, then it simply wouldn't make a buyback and burn that month. Or sorry, not buyback and burn. It wouldn't make a purchase of arson that month because there's no profits, right?
Understood. Yeah, makes sense. So you're kind of using, in the MDB world, the way the Phoenix will buy back and burn based on different criteria, but ultimately it's a similar kind of concept, but using the treasury in that same way, to, as the treasury goes to buy back, but you'll look at, I guess, different metrics to determine whether it needs to buy it back and burn, or sorry, not burn, but just buy it to inflate the price, or just not purchase, depending on whether the market activity is keeping it up on its own or not, effectively.
Yeah, exactly.
Okay, well, listen, I want to ask you some maybe some more philosophical questions, actually, not so much about only burns, if you're ready to move on, unless you want to carry on with some of the, if you've got anything else you want to speak about with only burns.
Yeah. So what I was thinking is that it was probably a good point where we could answer some of the community questions.
Yeah, I can
You
see
know,
Mr. Maestro's what. So let me try to paraphrase this in a slightly different way. So I think he asked a really good question in the sense that, and it kind of came across my head, but I asked it in a slightly different way. Is if I'm selling my governance tokens, obviously you benefit in one project, but I no longer hold those tokens. So do you want to so how does he make money effectively if that's the case?
yeah, absolutely. So you don't have to burn all of your tokens, right? When you're doing a governance vote. Let's say you come into pre-sale and you buy like $500 worth or whatnot. You obviously, as a holder of MDB, you want to see MDB's price go up. So let's say you burn like $50 worth and vote for MDB. You still have your O burn that you didn't allocate to back your vote with governance, right?
Yeah.
And you get to choose how much you're assigning. You're not burning the entire thing. So you can either choose to burn all of your O burn if you have a very sizable bag of another project, or you can choose to hold it and wait for the supply to deflate from other protocols buying and burning, and then sell when price appreciation gets you a nice happy profit. Or you can choose a combination of both. Like there's so many different ways that you could actually benefit from the ecosystem we're building here as a singular investor.
Cool, makes sense. I mean, I can see so maybe still on the same kind of subject. I've just getting slightly sidetracked, just kind of reading the questions. I don't know, Happy, if you maybe want to come up on the stage and have a bit of a one-to-one chat. If you're up for it, let me know and I will invite you up. But if not, so kind of I've thought about this a lot actually, but what would you say is your appraisal of DeFi, over the last 6 months? That's question number one. And then I guess, because I kind of know where the answer is probably going to be. And then what, as project leaders, I can vouch very highly for MDB. And, without trying to sound defamatory, I could probably count on one hand, leaders in this industry who have the same kind of ethics. And obviously you've run a project, Partly Finance, which has been successful for a long time. There's not many who can kind of hold that torch. So kind of speaking to you as an individual, what is your appraisal of the state of DeFi now compared to where it's gone? And then how do we keep confidence in the everyday investor in DeFi? Because obviously we're seeing the crypto market cap going from, I don't know, circa 3 billion down to less than 3 trillion, less than a billion now. Less than 1 trillion. I think like 800 odd billion, which is a massive drop. So obviously confidence is just low. You know what I mean? There's just with everything else, the economy and the estate and stuff like that. But how do we keep confidence in and around the DeFi space to not lose too many people? Because we know the bull run's going to change that. But right now in the here and now in the current state of affairs, what would you say, in your opinion?
So we have seen a massive shift, right? When we had the bull market going on, there were tons of, there's no better way to say this, but there were tons of shit coins that were launching with no real utility, no real, use case, nothing, right? You got your meme coins basically. And I think that just like every country needs to have a revolution every now and then to get rid of a corrupt government, you need to have a bear market every now and then to get rid of zombies. And what I mean by that is so we saw it back in, well, not personally, I wasn't alive back then. I'd be a little worried if I was. But when automobiles first came out, there were tons of automobile manufacturers. And then a shakeout occurred and only a handful survived. Then in the dot-com bubble, there were thousands of new tech companies that were popping up and listing on the stock exchange and everything like that. I mean, there were ones like there was a deli, a little simple hole in the wall deli, where you go and get your meat sandwiches and stuff that had I believe it was like almost an $800 million valuation on the stock market during that time. It was ridiculous. And then we saw the crash. A lot of companies folded. A handful of the strong ones survived. We're seeing that right now in crypto, right? Like previous bull and bear cycles didn't really affect things the way that it is right now because it wasn't as proliferated, right? You didn't have as many people in the space. You didn't have as many, meme coin or shitcoin projects popping up to basically do a quick, fast cash grab. Now, sorry, got distracted by the sneeze.
That was my wife. I'm so sorry about it.
It's all good. No worries. No worries. But yeah, so now we're seeing that same sort of thing happen in crypto, right? Where a lot of those garbage projects are folding during the bear market. And as a result, people are running scared. And that's understandable. A lot of them who are in DeFi may not have the same kind of financial acumen to when they're selecting their investments, right? They do it because innate human emotions, you buy the stuff that's going up, right? um, One of the hardest things for DeFi investors to do is to click that button with four little letters on it that says sell, right? They'll
Oh,
hold. Holding is easy, right? It's easy to hold and say, oh, it's going to go back up, it's going to go back up, right? But it's hard to sell when it's going up. And I think with the current DeFi projects, MDB is a great example of this, that are holding strong and still providing good value to people, good utility. That is what's going to survive, right? The projects that have revenue flow, that have solid use case, that have those utilities that solve a problem and benefit the space. Those are the ones that are going to survive. Like when Amazon stock crashed back during the dot-com bubble, they dropped like nearly 94%, I believe it was. And when interviewed, Jeff Bezos was like, well, I'm not worried because Amazon has positive cash flow. The only time you need to be worried about something when it's down is if it does not have a positive cash flow. Because just like stock price, token price really only matters at the heart of it if the protocol is trying to raise funds, right? Which, if you have a protocol that has that positive revenue stream, you guys can survive. You can survive the bear market and you can still continue building out a trusting space, right? And I think it's going to be up to the projects that survive the bear market and that thrive and grow when the bull market starts coming back to almost kind of self-regulate the space. um, and educate their holders on what is good and what isn't good, the things they need to look for. Like, so back before the bear market came about, I'd be sitting in on AMAs, and a lot of the questions that people were asking were really superficial in nature. And I don't know if you've noticed this, but now that we're here in the grips of the bear market, I've noticed that a lot of the questions have become very more substantial. Questions like, oh, is this considered as security? What are your plans when the SEC moves into the space with regulation? What kind of utility, what, positive growth do you have for your treasury? Like, these are the good questions that investors should be asking. And I almost feel that this bear market was necessary because without it, we wouldn't be able to get to the point where people who are invested in the DeFi space are educating themselves and asking these questions. That it's almost like you have to get burnt once or twice on a rug pull or a failed project before you realize that, maybe I should be asking the tough questions. And it's a keynote for projects that are happy to answer those questions and not label it as FUD, because really FUD just means fear, uncertainty, and doubt, right? How do you combat that? With information and knowledge. Answer those questions. Don't, and so when I see communities that are happy to answer those questions and give that information, that's always a green flag for me, because, they're not just trying to chase out, people who are asking the hard questions. They're answering them.
I agree. I mean, you look now. I mean, a lot of kind of my spidey senses are going off left, right, and centre, because it's kind of like you look at all the traditional finance systems in place that are old, antiquated, slow, and it's almost like what DeFi can do. And I feel like the majority of the space doesn't represent what DeFi is, in my opinion. And that's not to say anything negative about anyone's projects, because it's about making money, but ultimately it's also about changing the way society deals with everyday life, I think. And the DeFi space can do so much more to replace your traditional finance systems. And it feels like we're kind of in this infancy space at the moment where it's kind of, a bubble. Let's just say, okay, the bear market's kicked in. That's not great, but it's like a bubble where it's almost like it needs to pop. You kind of separate the wheat from the chaff, and then you can really start to see the benefits of what DeFi is as a system and as an industry, starting to replace some of the archaic systems that you're going to see. So I think the DeFi in itself I don't think will ever be, because smart contracts are just so powerful, aren't they? Anything can be done on a smart contract. And if it's done right, it's efficient, it's fast, it's trustless, and it's on the blockchain and it's immutable. All of that is really, really good stuff. If it's done right, secure, all the kind of stuff that you want to see, I think it's got absolutely every chance of surviving. Now, I am going to ask you a question in a sec, Mr. Peterson, but I've just got one more question, just in the philosophical kind of realm again, because I always like to kind of understand this. Do you feel a lot of early projects that have probably fell a little bit below the wayside started off with a good idea, but didn't have the right acumen to see it through? What I mean by that is they could be, young guys who can code, perhaps not financially savvy, but they've got a good idea. They've created something. In the early days, not really KYC, not hiding behind an IP and all that kind of stuff. But do you think a lot of that's probably exacerbated some of the issues that we found today? And it takes people like yourself and Danny, who are, financially savvy, have a good idea, but have also got a team that have built around them to make these projects be a success. How much would you attribute to that?
I would say that it did play a part, right? Because it's one of the first projects that I got into in the DeFi space had a really great idea, right? But it just wasn't managed correctly, and as a result, it fell apart, and that shook the trust aspect for everyone who was in that project, and it really changed the way that they look at. Okay, this team is saying they're going to build XYZ, but are they actually going to? Is this going to be managed correctly with the right experience? And I'm the first person to admit I don't know everything, right? I'm good at what I'm good at, and that's why I surround myself with people who are good at what I'm not good at, right? And it's very important for teams to do that, because a lot of times you'll find that maybe a project that has a really cool piece of technology that could really revolutionize certain aspects of the space, but their founder is a developer and maybe he doesn't communicate well to other projects, and so they just never get enough investors because he's not really good at public speaking, right? um so yeah, I feel that has contributed to kind of the situation we see ourselves in today. But I believe that on the flip side, um people who are running projects correctly, who know that they are not an island in and of themselves and rely on their team members, will start to shift the space back the right direction.
Good answer, matey. We have invited Happy Peterson up. Goes by the name of Happy Maestro nowadays. He had some questions in the AMA questions, but I thought it's easy to just invite him up and maybe just have a conversation. So, Happy, over to you, my friend.
Hello, hello.
Are you there, Happy? I'm not sure if he's having some mic issues. Don't seem to be able to hear you, matey. You can see that you're talking, but it's not. No sounds coming through. Let me just take you off the stage and I'll invite you back up. Try that again.
Take two.
Yeah. Like to speak. Try again.
I like his profile picture. The Phoenix looks so smartly dressed in his suit there.
Yeah. Happy? How's about now, matey?
Still nothing. Well, there we go. He rejoined. Try one more time. If not, I'm happy to have a little side chat with him and answer any questions he might have.
Cool.
All right, give it a go. You're on mute currently.
Does it work now?
Yes, it does.
I cannot hear you, so that's great.
Do you want me to maybe try and take you down and then put you back up again? I don't.
Oh, I have no sound now. Anyway, I will.
Can you
I'll
hear me?
just ask in Oniburns afterwards, then I guess.
Yeah, that works. Like, oh, yeah, he's gone. Yeah, absolutely. Hop on over to the Only Burns. I don't mind hopping into the voice chat over there, Voices of O'Burn, and just having a chit chat with anyone who wants to do a bit deeper of a dive afterwards. I'll even hop on camera if you want.
How do people get involved then, Silas? What's the best way for people to check you out if they want to invest, understand when the launch is going to go live and stuff like that? Is best place to catch you over in Discord?
Yeah, Discord is the best place if you want to stay on top of everything. I try to keep the Twitter updated, but again, I am not very good when it comes to Twitter. But I do my best to make sure things get pushed over there as well. But yeah, Discord's the way to go. And like I said, we welcome any and all questions, even the critical ones. Always happy to have a conversation. And sometimes, if you've got an idea, feel free to say it as well, because a couple of the aspects and tweaks to our ecosystem have actually come from our valued community members who made a suggestion that was really good.
Would you drop your Discord invite into the AMA questions channel if you don't mind, please, just so everyone can get access to that easily?
Absolutely. There we go.
Fantastic. All right. Cool. Well, we've overrun by about 12 minutes. Is there anything else you want to say just before we part ways?
Well, I wanted to thank you guys for having us up here today, and I wanted to congratulate you on being one of the few protocols that's actually still growing and succeeding even in this bear market. That takes some really good management and some good grit on behalf of the team. So well done. You guys deserve a round of applause.
Thank you very much.
Absolutely.
Sure.
But yeah, thanks for having us, and I look forward.
Good. Yeah, you too, and good luck with the project. And once you've launched and everything's kind of up and running, it'd be great to have you guys back in just to kind of check on performance, see how you're doing, and any way we can try and have support, we certainly will.
Awesome.
Okay.
I appreciate it.
Cool, Cyril. Thank you very much. Speak to you guys later, and I'll see you soon.
All right, take care and have a good one.